Throughout the day today, gold is trading in the no trade zone and the levels which I had asked you to buy and sell. Now in the morning analysis I asked you to go long only if you see it trading above 1961. Now see the beauty of levels, it precisely reversed from 1960 and on the downside it failed to break past 1950 levels and trading in range right. Also the crude oil WTI has gone till towards 77.4 and then has reversed sharply and in fact has gone close to 76 levels. Now what to expect with the US session? We will see with the help of charts and indicators. First we'll look into gold followed with crude oil WTI. Do watch till the end, listen to it carefully, note down the levels, trade as per the levels, and yes, do not forget to like, share, subscribe and comment. Do not forget to press the bell icon, which will keep you updated with the next analysis. The next update will be released before the Asia session tomorrow, so do watch that also. Let's start. First, gold on the hourly charts. Let's have a look. Now on the hourly charts, very simple. How beautifully it has moved. A crater, consolidation, breakout, consolidation. Now again back in the consolidation zone. You can see here. Same levels, 1950, 1961. Do not trade in between these levels. Now if you look at the direction movement, here is bullish. Also look at this. It was trading outside Bollinger Bands. The width of the Bollinger Bands has expanded. Now it is very much comfortable within the bands here. Now see the stochastic is also was trading overbought. It has seen a little drop and see the movement. Though it is traded bullish, though it is still very much at a comfortable levels, still the stochastic too has seen a good drop. But at the same time, look at the MACD. This has taken a crossover. This is a bearish crossover. This is divergent. And this crossover is happening at a high. Now see, whenever you have seen such crossovers, it is always followed with a little bearish move and possibility exists that we may see a little bearish move here. And hence you have to remain cautious on the upside. See the RSI is overbought too. And if you look at the 2-hour charts, on the 2-hour charts also similar observation, rise, consolidation, waiting for a breakout either which ways. Also I told you in the morning analysis, now this is the zone that is 19, 20 and 30. This is going to be an extremely important support. Only and only if it breaks below this zone, then you can consider it for a little bearish move here. Now see the directional movement is divergent and bullish. The stochastic which was overbought has seen a little drop here. The MACD is trying to converge and it is trading at a high. See the candles have already converged a bit. The RSI on the 2-hour charts is also trading overbought. Now look at the 3-hour charts. Similar observation on the 3-hour charts here. So I am not going to repeat it. Directional movement is divergent and bullish. The stochastic is overbought and looking downwards. So yes, the MACD is also in green trying to converge. See the candle size has seen the peak. It is probably looking forward to a little conversion. RSI is trading near to the overbought levels. And if you look at the 4-hour charts, nothing different. It was trading outside Bollinger Bands, now back in the comfortable levels and precisely same levels you can trade again. 1950 you can sell, 1961 you can buy. See here it is directional movement is bullish. The stochastic is overbought on the 4-hour charts. The MACD is divergent and bullish. See it has seen the peak. It is looking forward to converge a bit. RSI trading near to the highs. Now look at the daily charts here. Now see on the daily charts, I did tell you yesterday that previous candle has a strong push from the downside and this candle only below 1920 it will bring bearishness. And the yesterday's candle was extremely beautiful, a bullish candle, and see today it has achieved 1960. Further highs are done here. So it is still trading bullish. Once it drops below 1950, you can sell for 1947, 44, 40. Now remember this fact, it has to go past the zone that is 1930 and 1920. Then only we can consider it to be a little bit bearish. The 20 period moving average may give it a support at 1925 levels also. So this zone has become extremely important for gold. Only and only if it trades below 1920, it will call for the bears there. Now look at the directional movement on the daily charts is also bullish. The stochastic has seen a little drop and trying to look upwards here. The MACD is bearish and it is looking forward to converge crossover. Let's see if it does. The RSI is again back into the overbought zone. Considering this, similar levels buy at 1961, where you can expect 1965, 75 levels. 1975 is an ultimate and strong and a very strong resistance zone, because beyond that certainly we may see it hitting 2000 levels in the month of February itself, and hence you have to trade with caution there. probably, or because also it is overbought on the weekly charts, and hence a little retracement cannot be denied here. However, right now it is trading extremely bullish, and if you see it trading below 1950 levels, you should sell for 47, 44, 40. These are the support levels, and as I said, till 19, 20, 30 levels, it should not be considered as bearish. So yes, till the time on the downside it trades, you have to trade extremely with a trailing stop loss in between 1920 and 1975 now. So the next highs which it may try to create is at 1975. Till that time, you have to trade extremely cautiously with the trailing stop loss so that you can preserve your capital, first part. Second is, at every resistance you can either book little profits, 50% you can book and keep trading with the rest 50%, or you can continue book profits and re-enter, book profits and re-enter. Likewise, little by little you can increase your capital, because we can see here right now it is very much trading in range, and hence we have to benefit from the little movements itself. So trade accordingly, trade profitably, trade with the stop loss, trade with the trailing stop loss. Now let's have a look at crude oil. And yes, if you want to learn the art of trading profitably, you should join my mentorship batch. 19th batch is going to start on 6th of February. Do not miss this opportunity. Couple of seats are left. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now look at the hourly charts here for crude oil. 77.4, giving it a good resistance, and now since then it has traded bearish. It has achieved now close to 76 levels. Now see, it had a downward pull, because see, drop, retracement, and again drop. So it is getting a downward pull here. Also look at the previous two candles. See, it is looking forward to a slide, and these two candles were of the same bottom, and this time it is breaking out, and hence possibly it can try to achieve a little lows till towards 75.7 levels, and below that further bearishness can be seen here. Directional movement is divergent and bearish. Stochastic is oversold. MACD is divergent and bearish here again. RSI is again looking downwards, indicating further bearishness. If you look at the 2-hour charts, on the 2-hour charts too, this is a breakout candle, and this candle might take it further down, 75.5, 75 levels. We can see it today itself. Remember, this zone at 74, 75 is going to be an extremely important support zone, because below that, for the month of February, we may see a very good drop. First target should be at 70, and then below that you can expect further drops, and hence let's be watchful today. Now look at the direction movement, bearish, stochastic oversold, MACD divergent and bearish, RSI looking down too. And if you look at the 3-hour, now see on the 3-hour charts, increasing bearishness, it is looking down, breaking below the support. 76 is a good support. Below 76 we can see 75.7 and 75.45 levels. Below that further drop might take it for 75 and 74. Remember this fact, this is a very strong support zone, because below that it is going to crash heavily further on the down. Directional movement is extremely divergent and bearish. Stochastic has come to oversold zone. The MACD is divergent and bearish. It is looking down, and see, it is still little scope for it to continue with this downward momentum before it looks forward to retrace. RSI too is looking downwards, entering into oversold zone here. Now look at the 4-hour charts. On the 4-hour charts too, this is the third red candle. This is a breakout candle, though the body size is diminished here, but this flat bottom there and the previous candle's wick tail is indicating that it can try to bring little more bearishness, which might take it till towards 75.5 levels, and below that further drop might take it for 75.2, 75 levels also. Directional movement divergent and bearish. Stochastic is oversold here. The MACD is divergent and bearish, and RSI is looking down. And if you look at the daily charts, now look at the daily chart. This is the second consecutive red candle. Yesterday it failed to breach past 80 levels, which was a stronger resistance, and now it is looking forward to a little drop, may try to achieve 75.5, 75.2, in fact 75 levels. Now see, so far on the daily charts it was trading in this bullish channel. It has come out of the bullish channel. Now it is trying to trade with a drop, so possibly the first support levels at 74 and 75, these levels it has to break past. Now remember, once it trades below 74, you can expect that in few days from now we can even see 70 levels again, and once 70 is taken, it will bring further bearishness. You have to trade with caution till the time it trades below 80. Now we need to remain cautious and alert. Now see, the directional movement is bearish, stochastic oversold, The MACD has crossed over. This is trading with divergence. This is looking bearish. This appears we may see increasing candle size here. RSI looking down. So considering this, you can sell at 76 and buy at 77 for this $1. Do not trade. And if you are selling at 76, the target should be 76.7, 76.5 zone, very strong support, and below 75.7 zone and 75.5 levels, very strong support zone. If it breaks 75.5, then 75 and 74. Remember, once again, I am reiterating, on the downside on the daily chart, 74, 75 zone is going to be a very, very good support, because below that, we may see very strong drop in crude oil, and then we can expect it to hit 70 and in fact 67, 65 levels in the month of February itself. Take your trades accordingly. On the upside, wait for it to break past 77, but then 77.4, 77.8, and then 78.4, 79 levels could be seen. Beyond that, 80 is the ultimate resistance, but the chances of such reversal are not there today. That is my expectation. Possibly we may see at least 75.5 levels, but then you have to trade accordingly. You have to trade with a trailing stop loss, because this is trading oversold on the multiple smaller time frames or near term time frames, which means once it goes oversold, this also increases the possibility of a reversal and a retracement, and hence you should trade extremely with caution. However, till the time it trades below 80, it will be considered bearish. Take your trades accordingly. Trade with the stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe and comment. Join my mentorship batch, join my signals group. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. 76, 77 zone, do not trade. Thank you very much. Have a great profitable trading day ahead. Thank you.